Good afternoon. We're getting right down to business here, right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money doing more at 4 in the afternoon right here. Mottek On Money live on the air, 790 KBC, streaming live online worldwide at kbc.com, and your on-demand Mottek On Money podcast at kbc.com, Apple, iTunes, YouTube, and all your favorite podcast platforms. Well, a positive finish to a losing week for stocks. Stocks closing higher today. Investors taking in that latest jobs report, which came in better than expected. The economy, it turns out, did add more jobs than expected in the month of March. The major averages, though, finishing down for the week. Oil and gold moving higher. Gold hitting another record high today. The Dow coming in for a closing gain of 307 points. After that 500-point tumble we took in the previous session, the S&P 500 gained 57, and the Nasdaq added just about 200 points. For the week, the Dow was down 2.3%. The S&P 500 slipped 1%, and the Nasdaq down 0.8%. The Dow had seen 4 losing days in a row, starting the second quarter of 2024 and the new month of April. And the Dow has just seen its biggest weekly percentage drop since March of last year. That's when we had those big bank failures last March. Remember that? The stock market struggled to start April in the second quarter of 2024 after a record-shattering first quarter. That March jobs report did come in better than expected today, a 303,000 increase in jobs for the month of March. That was the biggest gain seen in almost a year. And the unemployment rate also fell slightly to 3.8%, staying below 4% for the 26th month in a row. That's the longest stretch like that we've seen since the 1960s. Of course, now, what will the Fed do? Will they cut back on rates or keep them as high as they are? We'll hopefully find out pretty soon. Gold prices, meanwhile, settling at a record high for the 13th time this year. Today, the strength of gold, a safe haven investment and a hedge against inflation, isn't apparently just being fueled by expectations for Fed interest rate cuts or geopolitical tensions. Purchases by central banks also a big factor these days. Oil prices surging to a new high for this year, the highest we've seen since last October following the Hamas terror attack on Israel. I'll talk about that later this hour with oil analyst John KILDUFF, and again, Capital, CNBC contributor and longtime contributor to this program. But first, on your money, the markets and the economy, let's bring in our investment expert here, and that is Bryan Perry with Mint Asset Management at mintassetmanagement.com, also author of the 25% Cash Machine. Bryan, thank you very much for coming to the line. What's been a very interesting week and finally a rebound here to wrap up the week.
Thank you, Frank. Yes, it was a relief to see the market close on a positive note following yesterday's big-time steep pullback here. It's triggered by a twofold catalyst. You've had Neil Kashkari, the Fed governor, president out of Minneapolis, talking about maybe no rate cuts at all for 2024. And then you had this reaction to the red alert that's taking over most of Israel here right now, looking for some kind of a reaction by Iran that's in response to their attack on their senior military people over in Syria. So that took the market into a place where we hadn't seen it before, and that was where there's geopolitical events are starting to weigh on this market sentiment here. So today's session was on lower volume here and headed into the weekend. That's understandable because of this Iran-Israeli situation. It is no longer a proxy war, where Hezbollah and Hamas and the Houthis are fighting on behalf of Iran. This was a direct hit on Iran's senior officers, military officers. So it changes the landscape a bit. It does not wholly, but it does change it a bit. And it brings an element of volatility back into the market here because people are going to be watching these headlines and seeing how far this goes, because ultimately it could drag the U.S. into this broader regional war right now. We've been mainly on the supply side of things. But if we start seeing boots on the ground and a lot of military operations with the U.S. flags, flying, then I think you're going to start to see the market get more nervous about that in general. So that's just something where normally the market shakes off geopolitical events when they're not local, when they're just, quote, over there. But this is different because Israel's our friend. They're our number one friend in that part of the world there. They're our best friend. And so it's important that, that the support we have Israel is unconditional. And that, at least that's my view of it. And we'll see what happens as this goes, because there's a lot of pressure on the Biden administration to put a ceasefire a ceasefire together, but on terms that Israel is not about to accept. So this is it's a very fluid situation, and going into the weekend, I think that surprisingly the market took it in stride. Where we're at right now, the Atlanta Fed, the Federal Reserve Atlanta, their GDP Now chart, which came out today, shows that the first quarter growth, GDP growth, is moved up here to 2.5% from 2.1% at the end of March. So that coincides with this stronger jobs number we saw today, and so that brings confidence into the market that the consumer-driven U.S. economy is still on very good footing here. And the bond market reaction was certainly expected, where the 10-year bond ticked up to 4.4% before settling back a bit at the close at 4.37. And that's normally you get a reaction where you just get more follow-on selling going into the weekend when you have this strong number. But there's a change in the narrative here, and it's really important that investors understand this. It's quickly turning into a narrative that of increased productivity gains from the implementation of AI in all things in all industries. And so we're going to get higher profitability, higher profit margins out of the same amount of sales. Even in a slowing economy, you're going to still see higher profit margins and probably higher earnings because of the implementation of AI in a number of ways, mainly in manufacturing and services. So this is an interesting a transition that the market's going through here. And it's really why the market, I think, glommed on to this jobs number today, because good news is usually bad news for bonds. In that case, it was, but good news tends to be also bad news for stocks, because it implies that the Fed doesn't need to raise rates or cut rates. So so for the market to move, to discard that or disregard that to some extent and trade higher, it's based upon the fact that it sees improving earnings going forward, and that that's more important than a tick higher or two in interest rates today. So that was a good change in sentiment, and I found that to be really foundational to this rally here, because that's important here, especially with earnings season coming up here in 2 weeks. And well, it actually starts next week with the banks on Friday. All the big money center banks are going to be posting on next Friday. So coming off of Good Friday, we had a good PCE inflation number last week. The market started out on a very good note here, because we have core inflation down around 2.8%, but we also have a stable job market here. So if you can still maintain sub 3% inflation and still have a labor market that's holding firm, that implies good consumer spending and strong earnings going forward. Hence, you have this positive narrative that's taking place here going into earnings season. So that's a good development, Frank.
All right. We're on the air live with Bryan Perry, investment expert at Mint Asset Management and author of the 25% Cash Machine. And Bryan, let me ask you this now, with this stronger than expected jobs report and upward pressure on inflation, as you touched on here, with the price of oil above 90 in London and about 87 now in New York, as you also mentioned, as we watch the latest Middle East crisis, the U.S. now on high alert and preparing for a possible attack by Iran targeting Israeli or American assets in the Middle East in response to Israel's strike on the Iranian embassy in Syria, according to the Pentagon today. I'll be discussing the oil situation and the situation in the Middle East coming up later this hour with John KILDUFF. But certainly consumers are noticing once again gas prices rising significantly, the price of oil at a new high for the year. That certainly impacts consumer confidence, which is a big part of the economy. And what is your outlook on inflation here, given this upward pressure that we're seeing here once again?
Well, this is where Kashkari was talking about, if there's a pause in the lower trend of inflation, then it bears out that the Fed should wait. And he's probably got a good point here, because these latest readings did not incorporate oil being up here toward 87 for WTI and Brent up at 90. This last week, during the course of this week, another big story was OPEC Plus decided they're going to go ahead and extend the production cuts of 2.2 million barrels per day, collectively speaking, for the second quarter of 2024. Now, normally when oil's up here at this level here, OPEC Plus tends to just dump as much as they can on the market, but they want to keep oil prices firm here. So there's a general right now. You just got, with all the saber rattling going on, that keeps oil prices elevated as it is. So it's not like, and the Russians have also voluntarily cut 470,000 barrels per day from production to that. We can't verify that fully because normally they're selling oil into the table to India all day long, and India refines that in a big time way and sells it to China. So it's hard to get a handle on all this, but the price is what it is, and we're seeing it at the pump, and that certainly hits consumers. That are especially of food prices. Also, people hate higher food prices and higher gas prices. Those are the two most immediate tangible things that come to mind for most Americans, especially those on fixed income. So it's important that people take this into account, and it will matter to the market if, in fact, we start to see retail sales start to get hit because of it. Even though if you have good jobs, that's fine. But if the cost of things start to elevate again here, and then you start to see lower month-over-month retail sales, that's going to the Fed doesn't want to get behind that curve, and so therefore the probability of a June rate cut went from 65% last week to 56% this week. Okay, based on what we're seeing here with the jobs number today. So it's still about a 50-50 shot that the Fed's going to cut rates. And this came off of Jerome Powell gave a fairly dovish commentary last week and this week, but that was countered by several Fed governors and presidents saying not so fast. And so I think this is the mixed message here was taken, and that's why we had a market here. It's so mixed this week also, the mixed price action here. But it does show also that the dollar got a nice bid. Gold's still strong, but you still have people that want to buy this market simply because the earnings model looks very good for the S&P.
All right. On gold, a record high, up nearly $41 today at $2,349.10. What about gold here?
Well, we've been talking about that for a while now. It's completely, that's a huge breakout, and it's interesting because the currency. The dollar's trading fairly well because rates popped, yields popped, and the dollar held higher, and so with gold up here, it's just I think you just have people, especially the central banks, are buying a lot of gold, Frank, and that's interesting because especially overseas because their currencies against the dollar are trading lower, the euro, the yen, the krona, just about everything. So you have central bank buying, you have a lot of buying, from India. And you also have just retail buying here because it's technically broke out. And this comes at also the expense of Bitcoin here, where Bitcoin has been trading. It came off the low, a recent low, but it's not making the same kind of breakout move that gold is. So gold has really taken on a new luster, of attraction for investors that didn't have any exposure to it. And if you just think about it, people just say I want a 5 to 7% exposure in my portfolio, and that gets that starts to spread. That's a big demand curve for gold just on the short end here.
On there live with Brian Perry. So let me ask you the big question we ask here, Brian. I know you're always well prepared for it. Where are you putting money now and/or taking it off the table?
Okay, well, there's some things that are happening here. That this week here, like Apple's trying to talk about going into the personal robotics business here. It's very early stage stuff, but they need a new strategy, and the stock is still holding right at 160, close at 169.50 today. So I just think that stock still looks like it's in technical trouble if the market it gives it back. Nike's still breaking down here. Interesting how that's other retail stocks are working higher, but Nike continues to fall apart, and that's just interesting because of their big exposure to China. Intel also I think is take it off because the losses for building these onshore foundries is just huge. They're going to take a $7 billion loss, in the current quarter for their foundry business, and they're not going to have any foundries ready to make chips till 2027. So that stock's breaking down when a lot of other chip stocks are acting just great. This week I bought ARM Holdings, ARM, and they make components for these NVIDIA chips. So ARM ran up to 165. It's pulled back here to about 125. I think it's a good entry point here. Blackstone, another one, BX. They're the biggest private equity operator in the world, and I think that that's also the deal flow, as we call it, where there's lots of mergers and acquisitions and deals getting done. That's the deal flow is brisk at Blackstone. I bought more NVIDIA here. It pulled back to like 885, 875. And I think that's a good place to continue to add and initiate positions here in what is clearly the market's leader. Novo Nordisk also pulled back from 136 to 125. They make the weight loss drugs, Ozempic and Wegovy here. And Wegovy's now been cleared by the FDA to treat certain kinds of heart disease. So it's another element of, similar to what Merck has with with their cancer drugs. Or, they find other applications for it. And then Microsoft. Microsoft here it looks like it wants to really get going again here. That's the safety trade. People buy Microsoft when they're not sure of much, because it's like a small mutual fund of great companies underneath it. With that in mind, those are what's taking off. And then coming off, United Healthcare, Humana, and CVS, they're getting hurt because the reimbursements by the Social Security, Medicaid, and Medicare programs are not going to be as much as they were hoping for, and so they're moaning and groaning about how the cost of healthcare is going to be, is going to really pinch their profits. So all three stocks broke down, and I think that's really out of void for the time being. And I took a profit on Micron Technology after the stock went parabolic, and Autodesk, they've got some kind of an accounting issue, so I like to move away from that. I had a nice profit in there as well, but it's a great company. Once that's cleared, it'll probably come back into it. And lastly, I took a trade on ExxonMobil here. The stock it's gone from 100 to 120 in no time. And with oil up here, the stocks tend to move ahead of oil, and then they tend to crest. And there's a lot of valuation in these big oil companies at this present time here. So I would just be, it was just, for me, it was a good trade, and oil is volatile. You typically get a chance to buy these stocks on a nice pullback.
All right, a lot of attention focused on GE with that stock, the way they restructured the company, right? GE itself went up 6% today. What about what do we need to know about these spinoffs here?
Well, these spinoffs are working. This GE Aerospace is just, and this Larry Culp went over there. He's the CEO of the prior conglomerate, and now he just wants to run GE Aerospace. He's very excited about that. And the stock is just, it's under heavy accumulation here. There's a lot of volume in GE right now. So I think that, of the two, you just stay with this particular name here, because it's a pure play. It really unleashed, a lot of value for that company here when now it's a standalone aerospace company. So that's, again, it's run from 135 to 156 today in just a matter of this week alone. So, you get in these kinds of moves here, and, where you have the stocks up, 8, 9, 10 points a day. And then you just, got to be careful not to chase, because invariably they do come in. And so that's important to know that. Like you've seen there with Super Microcomputer, it was up to $1,100. Now it's back to, somewhere around $950. So give these stocks a chance to breathe, when you're in these types of things. But GE it's one to buy on any kind of a meaningful pullback, Frank. It's a premier name, along with Eaton Corp. ETN is a similar type of situation there. These stocks you can tell that institutions want to own these stocks for the long haul.
Terrific, Brian. Well, thanks for taking the call to wrap up. Will turn out to be a very interesting, exciting week, and mercifully a positive finish here to wrap up what was a losing week. But that big jobs report helped perk up the mood here heading into the weekend. That is Brian Perry, and Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com, all through the 25% cash machine. Brian, have a great weekend, and thanks again for coming to the line this afternoon.
Okay, Frank, always great to be with you. Thank you again. Have a great weekend.
Likewise. Thank you very much. Exhausting week, actually. I'm kind of, it's been a wild week. Let's get right out to the freeways now. 790 KBC. Folks, let's be honest. Sometimes we find ourselves or a loved one dealing with a massive injury caused by a terrible accident by no fault of our own. Sometimes it's simply being in the wrong place at the wrong time. We're good at preparing for earthquakes and fires, but let's not forget to prepare in case we're involved in a major accident. It's critical to know who to call first. Clark Fielding became an attorney to help you in a crisis. Fielding Law is focused on justice and resources for you because they understand how the system works and what to do in the most horrific situations. I always say to put the Fielding Law team in your phone under the word accident, so all you have to do is hit dial. Believe me, you'll feel a lot better having set this up for yourself and your family. The number is 833-88-SHARK. That's 833-88-SHARK. With the population exploding and increased vehicles on the freeways, be proactive. Prepare for the worst and expect the best. But if and when you do need help, call Clark Fielding and his team of sharks at 833-88-SHARK. That's 833-88-SHARK, or go to clarkthesharklaw.com. Again, that's clarkthesharklaw.com. Mottek On Money continues here, 790 KBC. Up, Goldfinger. Gold back in the spotlight this week, hitting record highs. Gold up another $40.60 an ounce today to $2,349.10 an ounce. Silver also along for the ride of 35 cents at 27.60. That's a new high for the year for silver. The price of oil, meanwhile, also hitting a new high point for 2024 as we watch the rising tensions in the Middle East, with the U.S. and Israel now on high alert for possible Iran military strikes following the attack on a military target in Syria this past week. The stock market moving higher, with the Dow 307 points today, selling at 38,904, the first winning day of the week for the Dow this week after 4 losing sessions, kicking off the second quarter of the year. The S&P 500 of 57 at 5204, and the NASDAQ of 199 to 16,248. This as we did get that stronger than expected jobs report first thing this morning from the Labor Department, showing hiring coming in much better than expected at about 303,000, and the nation's unemployment rate also ticking slightly lower for the month of March. Taking a look at bond yields, they're popping up to 4.41% for the yield in the 10-year note. That's the one that impacts the fixed-rate mortgage rates. Checking the cryptos now, we see Bitcoin up about 400 now at 67,863. Ethereum down 14 at the moment at 3,324, and Doge at 18 cents. And now the latest news for you here on 790 KABC. Mottek On Money continues here, 790 KABC. Nervous time again in the Middle East, with the U.S. now on high alert and preparing for a possible attack by Iran targeting Israeli or U.S. assets in the Middle East in response to Israel's strike on the Iranian embassy in Syria. Suspected Israeli warplanes bombed Iran's embassy in Damascus Monday in a strike that killed an Iranian military commander and marked a major escalation in Israel's war with its regional adversaries as the Israel-Hamas war continues following the terror attack in Israel by Hamas back on October 7th. According to Reuters, Iran's Islamic Revolutionary Guard Corps said that 7 Iranian military advisors died in the strike, including a senior commander in its Quds Force, which is an elite foreign espionage and paramilitary arm in the Iranian military. Iran has said it reserves the right to take a decisive response. We did see President Biden discuss the threat from Iran in a phone call this week with Israeli Prime Minister Benjamin Netanyahu. The White House did report that. In the meantime, consumers noticing another spike in gas prices. And on Wall Street, the price of oil has hit the highest we've seen so far this year. In fact, the highest since last October, following the terror attack on Israel by Hamas. Let's bring in a veteran oil industry analyst now, John KILDUFF at Again Capital, also CNBC contributor and longtime contributor to this program. John KILDUFF, thank you very much for taking the call here on this important story here today.
Thank you, Frank. Good to be with you again.
Wonderful to have you with us, John. And take it from the top. Give us your assessment of where things stand here. If we do see Iran attacking U.S. or Israeli interests in the Middle East following what happened this week, what's that going to mean?
Yes, Frank, these are tough times for sure. And I've been through this. I feel like I can't even count anymore as to trying to decipher what the next move is. I will tell you this, the bar for all-out war in the Middle East is much higher, I think, than people realize and sort of come to a quick conclusion on quite often. But this time, with all the warnings that we're hearing about with U.S. troops, as you referenced before we came on the line, about the U.S. being on a high alert for an attack that's imminent within days from Iran, we'll have to see. The oil market seemed to have gotten wind of this midweek, late yesterday even. We saw big orders coming in, buying, that pushed Brent crude oil over $90 a barrel, WTI, like you said, to 86, the highest since October. And this comes in the face of, some headwinds here in terms of the Chinese economy. So this recent run-up is all about, once again, renewed Middle East tensions. The question is going to be, and the question I'm grappling with is, what will Iran really do? Will it amount to much or not? Will we all wake up the next day or even later the day that it happens and be like, is that it? Because that well could happen, because that's what Iran does, because Iran doesn't want direct conflict with Israel or the United States. They like to make mischief and trouble, as we've been seeing, whether it's with the Houthis or Hamas or Hezbollah. They like to hide in the background and make mischief that way. So would be a new direction for them. I'm a little skeptical they'll take the leap, but we'll see.
Probably saw the report that said Iran has asked the United States to, quote, step aside, unquote, as the country prepares a response to a suspected Israeli attack on its consulate in Syria. You think the U.S. is going to step aside in this situation?
I know the U.S. has similarly told Iran not to target any of our assets in the region. So, again, this is what I'm talking about when I sort of want to highlight how what a complicated, diplomatic, almost inscrutable situation this always is. Because several years ago, when the United States targeted General Soleimani, the then head of the Quds Force that you referenced, the Iranians didn't do anything, Frank. When the Houthis via Iran bombed the major Saudi Arabian export facility at Abqaiq, nobody did anything. So that's why I'm trying to be measured here in terms of what to expect. Again, because the Iranians certainly don't want to have any kind of direct confrontation with the U.S. They know how that'll go. And I think they pretty much know how it'll go if they were to take it to Israel as well. But it's nothing any of us wants, and that would put oil supplies finally in jeopardy if this thing were to spiral and the Iranians and the Israelis were, in fact, to finally square off with each other.
All right, so with oil back above $100 a barrel in Europe and, let's see, 86.73 at last check here on this side of the pond, where do you see the price of oil go here and, of course, gas prices along for the ride?
I think we're going to continue higher, Frank. We got a couple of issues going on. We did get good economic data out of China for the first time in I think years now. This week, you saw the employment data here in the U.S. That bodes well for strong gasoline demand nationally. And this is the time of year when the oil market gets nervous about the sufficiency of supplies for gasoline. So I think the whole complex is going to get squeezed higher here for a while, and certainly until we find out what the Iranians are going to do, or in fact do. So that is the other factor here. But really, given all the concerns, all the nervousness, the time of year, I would expect Brent crude oil now to hit $100 a barrel here within the next couple of weeks, if not sooner.
Well, that's certainly big news, but not the all-time high, of course, which was 145 or so back during the financial crisis, and of course the all-time low was negative $40 during the pandemic. We'll never forget that day when we spoke, right, John? When oil actually went negative when the whole global economy was shut down, and now we're back to close to 100 here for oil once again in Europe. Now, as far as the price of gas is concerned, we're looking at $5.28 a gallon here in Los Angeles. That's 5 cents higher than it was just yesterday, and let's see, more than 30 cents higher now than a month ago. In fact, almost 40 cents a gallon higher than a month ago here. So where do you see gas prices go here in the Los Angeles area?
They're going to continue higher, Frank. I would expect your average to maybe near $6 a gallon. If again, what we just talked about, if we see Brent at $100 a barrel, if we see WTI over 90, that's the U.S. Texas brand, you'll see those prices pick up. You'll see a national average get above 4 again, at least for a time. Like I said, it's going to be a tough run up to summer. The good news is that typically the prices of gasoline falls after Memorial Day pretty steadily into Labor Day because we are able to sort of assess the situation, see that gasoline inventories are sufficient, and we're going to be fine. But again, there's just so much tension in the air right now that the only thing to do at times, if you're a trader and involved in these markets, is to buy now and ask questions later.
Looks like the oil names have suddenly become the Magnificent Seven here, John. I thought of you earlier this week when I saw the report that oil stocks, the highest since, 2014, they've come to life in a big way. From an investment standpoint, where would you be placing your bets here at the moment?
Well, I think I've consistently told your listeners to stay in these names, Frank. ExxonMobil hit an all-time high this week. So every time I get disabused about toiling in the fossil fuel sector rather than the internet or AI, I'm reminded that for those engineers to get to work to make those AI things, whatever they are, they got to get in the car with gasoline for the most part. So we're still in the game, Frank. Us fossil fuel guys are still in the game, but seriously, no. Even if prices stayed where they were a couple of weeks ago at like $70 a barrel for WTI, they are minting money. It's an incredible operating environment for them, even with oil prices at $70, even in the 60s. So that's why you're seeing ExxonMobil do so great here, and the other companies. They're going to continue to raise the dividend. They're going to continue to buy back shares, and they're all just going to just continue to operate smartly and just make the returns for investors. So I mean, really, it's a pick 'em situation now as far as the whole sector goes, if you ask me. But my favorites remain Valero, ExxonMobil, Chevron, and those are the big three to sort of go with.
Quite a rebound from the pandemic days when the oil companies were flat on their back with that negative $40 reading on the price of oil, which was an unforgettable day. Which again we were talking about at that time, and now we're back to the levels I haven't been seen in quite some time. John, thank you very much. We'll follow these serious developments with you very, very closely, and always appreciate your coming to the line for us here in Los Angeles. That is John KILDUFF, oil industry analyst at Again Capital and CNBC contributor, probably the most prominent of the oil analysts in the United States. John, thank you very much for speaking with us here this afternoon.
Thank you, Frank. And I have to say, nobody pays attention more or covers the oil patch better than yourself out there in L.A. So great to be on with you, Frank. Thank you.
Thanks. Thank you very much, John. Appreciate that very much. And right out to the freeways we go now on 790 KABC. Mottek On Money continues here in 790 KABC. Game on, applying the lessons of sports in business. Our next guest wrote the book on how an athlete can turn their sports experience into a thriving entrepreneurial career by taking over a business and leading it as CEO. Jay DIXON, a former college athlete himself, turned entrepreneur, investor, and coach. He consulted with entrepreneurs nationwide on the process of buying, growing, and selling businesses. So this is a big deal. Jay DIXON, author of After the Game, Bridging the Gap from Winning Athlete to Thriving Entrepreneur. Jay, thank you very much for coming to the line here this afternoon.
Frank, thanks so much for having me. Spent so many days growing up in Southern California listening to you and joining you now from New York City. So thanks for having me.
So wonderful to speak with you, Jay. Thanks very much for taking the call here, and that's great to hear. And tell us about your great background in sports and how you're applying it now to business.
Yeah, absolutely. So like I said, grew up in Southern California, and I was a football player, and that's who I was. That was my identity. I ended up my career at University of Nevada. I played for Hall of Fame coach Chris Salt, and I didn't make the NFL, and from there, really went around many different industries. Ended up starting a company, growing it and selling it, and did that a few more times, and ended up in what I call the game of business, really at the small markets, which is buying and selling companies and consulting with many across the country. And now I run an elite accelerator for athletes to teach them this game and how they can get back in the game, utilizing their skills they use in athletics.
So you're used to getting across the goal line, right? So what's your big lesson here that business people can learn from the world of sports?
Yeah, in the book, I dove into the neuroscience behind what you learn in sports and not athletic education. And for me, when I finished my career, my resume was full of football stats, tackle for losses, and those things. I didn't find value in it as I entered the workforce. However, as I've grown in my career and seen grow great businesses and consulted with some amazing entrepreneurs, I've found that really that athletic education is what drove success. And I dove into the neuroscience and the data behind it. And it's no wonder that when you look at a small business, especially, that a study that former athletes that are CEOs operate those companies at 15% higher return on assets than non-athletes. So there's a lot of these soft skills that are developed in sports. We can tailor it to the neuroscience, and I worked with a Harvard psychologist on that. It's all in the book. And yeah, so we like to start with that. Those are the things that I can't teach, but I can teach the other stuff. And help these folks get back in that game and really give them skin in the game, get in the business, and drive these companies forward.
And of course, winning, a big part of sports, right? And in business too.
Yeah. Oh, absolutely. That it's an environment when you can gamify the business. And like I said, when as I came out of sports, my mind was always around what's the game of business, and I was searching for it. And it wasn't until unbeknownst to me, a gentleman came in and offered to buy a company I had built, and I thought, wow, this is amazing. you can sell a company. And so he taught me a lot, and we partnered on another company from there. And this became a game for me of, growing businesses. And now with athletes, I like to put them in these successful positions. So rather than starting a business, we're going through the largest wealth transfer in history. I'm pushing them towards, hey, let's acquire these companies. There's some great companies out there in all different industries, and let's get in entrepreneurship this way. So, success is my formula for these folks.
Terrific. Well, M&A activity, that's interesting. Of course, you probably, being in this area, you probably connected with a lot of people at the ACGLA, Association for Corporate Growth, or ACG 101, another big M&A group here. And, of course, we have the Milken Institute Global Conference coming up, and M&A activity is always a big subject. Private equity, a big subject, and a lot of money, a lot of cash still on the sidelines, right, waiting to be deployed. What do you see ahead for M&A activity this year?
Yeah, absolutely. And so the latest reports I'm seeing are, $2 trillion in what they call dry powder. So that's, committed capital in private equity. And as these credit markets, the idea is as these credit markets loosen up and come back down to where they were in 2021, private equity firms can leverage that credit to get active in the market again. And from what I'm hearing and what I'm seeing, they've been focused on value creation within their portfolio companies and really waiting it out. But we're at almost historic highs with all this capital that needs to be deployed. And my expertise really lies in the Main Street market, so the lower markets, companies making 500,000 EBITDA or discretionary earnings up to 5 million, and as the market continues to open up, I think as these sellers are looking to sell their business, there's going to be a lot of opportunity to get back in the game and really acquire these companies utilizing private funds and credit out there to make 1 + 1 = 3, which is something I teach as well, and making sure the seller wins and you win as well along that route. So.
All right, terrific, Coach. Well, thank you very much for taking the call here. Great to speak with you. That is Jay Dixon, the author of After the Game, Bridging the Gap from Winning Athlete to Thriving Entrepreneur. His website is jaydixon.com. Jay, great to connect with you here. Thank you very much. We wish you a great weekend.
Thanks so much for the time. Appreciate it.
Thank you very much, Jay. And right out to our next program, which is the 790 KBC News Blitz with Randy Wang, and I'll be back on Monday at 4. We'll be doing more at 4. Mottek On Money, 790 KBC.
The countdown is on for the 2024 NFL Draft, presented by Bud Light, live from Detroit, and you can attend in person for free.
Welcome to the NFL Draft.
See the next NFL stars and experience the ultimate NFL fan festival, featuring live concerts, interactive games, player autographs, and more. The NFL Draft, presented by Bud Light, April 25th through 27th. Visit NFL.com/draft access to register for free entry today.